Okay, so it's still treading water. It was looking very precarious last night. So we've got an arm wrestle going on in pretty much every other market that you'll look at. Here's the S&P. It's the futures, not the fake market as some clown refers to as. Europe actually trades. And they trade in volume. So does Asia. And when they trade the US market, they trade futures. It used to be an options trader. You ignore the futures at your peril. It's a real market. So a few arm wrestles going on. Like in the US market, I guess it's like 43 to 44, like on the wide. That's what's going on there. When you look at the Australian market, as I do, being Australian, as you can no doubt tell, similar arm wrestle going on, right? 71, 73 on the wide. I mean, 200 points, but then again, we're at 7,000 rather than 4,000. 3,000 better than the US. The Australian dollar, surprise, surprise. It's trading water here between 73, 71, 73, 71 on the narrow. Even gold. Gold is sort of having a bit of an arm wrestle, 17, 18, like on the wide, right? When you look at it, it's, really the last how many months, it's kind of been something like that, like 17, 20, 18, 20, sitting in these ranges. The NASDAQ, I guess you can say it's sort of found a little bit of a range. Not really, not as convincing as some of the other markets. You can see it's smaller, right? But the thing that it points out, you can see there very clearly, which is very common with all the other markets, is underneath this breakpoint, in all of them, there is fresh air. And so that's why we're seeing so much jubbing around and time being eaten away in all these markets around these ranges, because for every single one of them, the NASDAQ shows it very clearly, if it breaks down below these levels, the bulls are in trouble, right? And so they're fighting hard. The market is fighting as far as which way to go. So there's a lot of risk changing hands. These moves where 50 to 100 points up and down, every other day, they don't happen that often. Right? They do happen. Right? You can see it here in the NASDAQ, right? These are volatile markets that we deal in. But there is certainly a risk transfer that's going on in all these markets. And if it does fail, every single one of them, gold, the Aussie dollar, the NASDAQ, the S&P, they've all got fresh air there. And I guess the one market that is sort of leading the way, if it comes up on my chart here, the bonds, they really have been leading the way as far as breaking some of that clean air. You can see where the Aussie market here, when it broke this 141, went straight to the next level, 160, kind of touched it. And the US market is a similar thing. They are looking like they are having a very powerful move to the upside. And if they continue on their merry way, that will be a challenge for those long in equities. That's about it for today. So you can see the US, the S&P, it's at a key level, 43 to 44, and you can see here, like on the weeklies, fierce opposition to it going down, which is to be expected. That's been the story for the last 18 months. You can see in the futures it's starting to tick above up to that 4,400 level. There is a lot of work that has been done around there, so it certainly hasn't broken the range yet. But if it goes much higher, it will start stopping out, some of the shorts. But as I said, when you look at the Nasdaq and all these other markets, again here, if it breaks below here, there's a lot of fresh air to be had. And so I guess that's one reason why I've been short these markets, not just because I thought they were overvalued and starting to break some technical levels, but there is certainly a susceptibility to what these things could do if these levels break. Now, the markets have had a reasonable pullback, as it stands. This kind of 5% level, it's 5 to 10. 10's a big pullback, 5 is small, right? So it is in that range of, is it going to go on with it and have like a 10% move, or is it just going to put up with it with a 5% move? The way I'm playing it is the top of this range, good to be short, because I guess you've got 3 possibilities. It'll either go bottom of the range, right? That's good for you. It'll go through, great for you, or it'll go up and you'll stop out. So the risk reward for me is still being short these markets. All right, have a good one, and I'll look forward to seeing what comes out with the jobs numbers in the States tonight and the non-farm payrolls tomorrow, which is one of the reasons why these things are biding time as well. A big countdown. Okay, ciao.